Prabodh Agrawal, Head of Research with IIFL Institutional Equities, joins us live with a quick take on Indian markets. Prabodh, technically, a new bull market has started. Fundamentally, are you confident that a new regime, a new bull market has started for India?
Yeah, the markets are definitely looking up. The FII flows have been very strong. The expectation is that the economy will bottom out in FY15 and start picking up. The corporate earnings growth momentum should also pick up after being, in a sort of declining mode for the last 4 or 5 years. So definitely fundamentals are expected to improve, and the fact that the markets have been trading sideways for a number of years, valuations are looking attractive. Many sectors and stocks have been beaten down significantly and valuations are very attractive. And therefore there are enough reasons why the market should start looking up and go up further in the coming months and quarters.
So how exactly would you map the risk-reward ratio? Nifty is up more than 20% from the recent lows, but earnings are yet to catch up. We still don't know what will happen to inflation. Interest rates are have not come down, and bond yields are almost at 9%.
Certain fundamental parameters have improved, but a broad-based economic recovery, you're right, is not happening immediately. It will probably happen towards the end of FY15 or probably gather momentum only in FY16. So the market is clearly, discounting a recovery ahead of the actual event. In that sense, many stocks may be running up well ahead of the expected recovery, and therefore there could be corrections as we go along. But clearly, we must be very clear that the actual economic turnaround is 3 to 4 quarters away. And in the meanwhile, if the stocks run up too much, then there will be correction. What is going to drive the market for the next 3 to 4 quarters, until the actual recovery happens, is basically sentiment and fund flow. And as long as the sentiment and fund flow remain positive, the markets will remain buoyant. The overall index may not necessarily go up, because I always feel that, of course, we are focused on the index, but there are quite a few heavyweights which are not performing or will not perform, and therefore the index rise may be muted, but the actual stock or sector performances may be much more than what the index movement may suggest.
Prabodh, what is your sense on some of these NBFCs, or rather I should say IDFC, which has now got an in-principle nod? Is the trading momentum here to stay on IDFC, which has already given a huge upside, or do you think this is a long-term story when, once the bank license work starts, once the bank opens, and it's a long-term play, so after 2 years you would look at the stock again?
Yeah, you're right. This is a very long-term play. Of course, there is the near-term excitement because we have had a new bank license coming after a gap of more than a decade. But it will take a long time for IDFC to establish a bank. They have 18 months to start operations or be fully compliant with the RBI requirements, and then start building the bank. So, and we know that the challenges which IDFC faces, which is that they have to develop a retail network, they have to develop a retail deposit and a CASA deposit base, but they would have to maintain, the obligations towards CRR and SLR and priority sector from day one. So these are the challenges they would face, and therefore the profitability would be under a challenge in the initial years. So I would say that after this initial excitement, the stock would stabilize, probably can weaken, but it's a good long-term positive for the company. But investors have to understand that this is a very long-term story.
What about IT? Because Prabodh, soon we would be, staring at IT earnings. Infi would be the first one to come out. While we've heard it from the horse's mouth that FY15 is going to be the stronger quarter, or rather FY15 onwards we'll see stronger performance as opposed to this quarter itself, both in case of, Infi and TCS. But what's in store for the stock prices? Because, off late we've seen a shift to cyclicals, but it's not like IT stocks haven't performed. There has been some buying as well, which has come in at dips.
Yes, the IT stocks, have been away from the limelight because of two reasons. One, because of the fact that, as you mentioned, there is move towards cyclical names. So there is this rotational trade away from the defensive and the export-oriented and the consumer-oriented names into the investment-oriented names. So that's been happening for the last 3 months, which has taken the sheen off IT. And the second is the appreciation in the rupee, which also has caused some kind of concern about the margin pressure on the IT companies. But our belief is that IT remains a good story for FY15. The earning growth momentum will be strong for the IT companies, and it will be superior to the rest of the market. Valuations are reasonable except for a couple of frontline IT names, and therefore I think these stocks will deliver good returns in FY15. We are positive on the sector.
So what is your return expectation for the IT sector?
See, the IT companies would deliver returns of high teens, between 15 to 18% earning growth. Without expecting a re-rating, you should expect a similar kind of return on their stock price as well.
Prabodh, have you picked up anything on Wwatch? Because this is one company where I think there are multiple problems.
Yeah, it's actually a beaten down name, which in this kind of market people are looking at laggards and stocks which have lagged and valuations are attractive. So Wwatch is probably being played on that kind of expectation. There is nothing specific that we have heard on Wwatch. By and large, we continue to like the pharma companies. But of course, as you rightly say, Wwatch has gone through a lot of issues in the recent past, and we haven't heard anything in the last 1 or 2 days to say that things have suddenly turned around for the company.
Of late, Sun Pharma is also looking slightly rusty. Do you think Sun Pharma at the current juncture is fairly priced to perfection? Because Sun Pharma did extremely well in 2012 and 13 because it was growing and markets wanted to associate with companies which were growing irrespective of valuations. But now that the trade has reversed, do you think names like Sun Pharma, Cipla, they would really languish?
Yeah, they may underperform in a strong rising market, but we believe that Sun Pharma's growth drivers are still in place. The earning growth momentum in the current year will also remain strong as it has been in the past. And because we have had significant upgrade to earnings of Sun Pharma in the last 2 years, the valuations are not that expensive as it seems, even though the stock price has gone up so much. So we like Sun Pharma, but of course, as I said, in this kind of market, probably it will underperform in the near future. There are other pharma stocks, in fact, which are trading at a discount to Sun Pharma, where people may want to put their bets in the current environment if for whatever exposure they may want to take in pharma. But so there's nothing wrong with Sun Pharma per se, but it is just that this is a market where there is a lot of rotational trade and people are looking at laggards rather than stocks which are relatively more expensive. I wouldn't say that Sun Pharma is very expensive, but of course there are other stocks which are much cheaper and where there is a turnaround story.
Prabodh, Aurobindo Pharma has been one stock which has had a dream run. The last fiscal it's appreciated 250%, and even after that it doesn't seem to be abating. We've again seen great moves coming in on this one in the last 2 sessions. What's your call on Aurobindo Pharma?
Actually, we don't have a call on Aurobindo. That is not a stock which is under official coverage. We like the stock, from whatever we know, but I wouldn't be able to comment in detail about the stock. It's not what we cover.
Sure. A lot of people, Prabodh, are, talking about Reliance being the next leader of the market move. What is your sense, amidst, of course, big question marks on what comes out of the KGD6 gas pricing issue, etc.? Does it seem like this sleepy giant for the last 5 years could finally give you good returns?
Reliance is facing challenge in each of its key businesses, which is petrochemicals, upstream, refinery, on telecom and retail. So fundamentally there are a lot of challenges which is reflected in the current stock price. So incrementally things could look up in some of the businesses for example, in the upstream or in retail or, in telecom also, where the business could be launched soon. So there could be some upside from the current depressed levels, but we are not too sort of excited about it. It is, we would say, we are neutral to positive on the stock.
What's your sense on L&T? Because off late, ever since this shift to cyclicals has happened, Capco's engineering infrastructure as well has moved a fair bit, and so has L&T. But after this news, how would you approach the stock?
See, L&T is again a play on the cyclical recovery, but again, it's a stock where one has to take a slightly longer term view. Because the actual turnaround in the domestic order book is still far away. It is probably 3 to 4 quarters away. So it'll take time for us to see a pickup in their order book, for example, on the road sector or on the power sector or on the commodity capex side or the urban infrastructure side. So there could be some pickup as we go ahead, but I would say that this is a more long-term story. One has to play with a 2 to 3 year view, with the expectation that the economy has bottomed out and things will pick up. And therefore, L&T, the advantage compared to many other capital good companies is that L&T is largely domestic focused. The overseas share of the order book and revenue is very small compared to many other capital good companies. So it's a good, well-managed company which one has to be exposed to play the cyclical recovery.